Step onto any retail trading forum, financial media channel, or high-octane Discord server today, and you will find market participants fixated almost exclusively on mega-cap artificial intelligence infrastructure, semiconductor thermal limits, or high-beta consumer tech trends. Yet far away from the blinding neon lights of Wall Street's consensus trades lies a vastly different kind of structural friction, the microscopic biomechanical bottlenecks of the human skeletal system and the multi-billion-dollar surgical device landscape trying to bridge them. Trading below $1 at roughly 17 cents per share with a microscopic market capitalization under $3 million, Tenon Medical Inc., NASDAQ, TNON, presents a textbook case of deep microcap market mispricing. While short-term retail momentum chasers dismiss microcaps experiencing severe equity dilution or reverse stock splits as distressed traps, they fundamentally miss the core clinical reality. Chronic lower back pain affects over 30 million American adults, with 15 to 30% of those cases originating directly from dysfunction within the sacroiliac or SI joint. Standard financial media looks at a trailing revenue print or a recent capital raise and stops reading, completely ignoring the engineering hurdles of stabilizing the last major orthopedic joint successfully targeted by medical technology. This disconnect between headline-driven retail panic and the underlying multi-billion-dollar surgical total addressable market creates an asymmetric valuation gap that seasoned market operators examine with clinical precision. Market dynamics and institutional positioning. Analyzing the daily tape of Tenon Medical reveals the classic psychological warfare of ultra-low-float, distressed microcap equities, with average daily volume spiking periodically against a very tight share structure. Price action is heavily dictated by liquidity constraints, regulatory compliance maneuvers, and retail sentiment fatigue. Institutional heavyweights and specialized healthcare microcap funds often steer clear during periods of forced capital restructuring, equity offerings, and compliance-driven reverse stock splits, leaving the tape vulnerable to sharp algorithmic volatility and emotional retail selling. When companies execute capital raises or announce structural adjustments like recent reverse stock splits to maintain NASDAQ listing compliance, standard automated sentiment scrapers flash immediate red flags, triggering cascading stop losses among inexperienced traders who confuse temporary balance sheet restructuring with total operational failure. However, astute market insiders look past the short-term dilution noise to analyze the burn rate, intellectual property defense, and clinical adoption metrics of specialized surgical instruments. Before we dive deeper into how Tenon's proprietary hardware disrupts traditional spinal procedures, let us check the pulse of the community. Are you actively hunting for asymmetric upside in deeply discounted microcap medtech stocks? Or are you sitting on the sidelines waiting for clear institutional accumulation to confirm a technical bottom? Drop your thoughts in the comments below. Business model and historical context. To understand why Tenon Medical occupies a unique niche, one must strip away outdated historical framing that groups all medical device companies into broad, generalized healthcare categories. Historically, the treatment for severe lower back pain and sacroiliac joint dysfunction relied heavily on conservative management, palliative steroid injections, or invasive multi-level open fusion surgeries that carried immense patient recovery burdens and high failure rates. Tenon Medical disrupted this antiquated paradigm through the development and commercialization of the Catamaran SI joint fusion system. Unlike legacy lateral or posterior approaches that struggle with optimal biomechanical fixation, the Catamaran system utilizes a proprietary single robust titanium implant designed to pass through both the axial and sagittal planes of the ilium and sacrum. This geometry transfixes and stabilizes the SI joint along its natural longitudinal axis, addressing a severe clinical gap where traditional orthopedic solutions historically lagged behind knee, hip, and degenerative disc treatments. The company derives its revenue primarily from the sale of these specialized surgical implant systems and single-use instrument kits to trained orthopedic and neurological spine surgeons. By focusing on three distinct commercial opportunities, primary SI joint fusion procedures, revision surgeries for failed legacy implants, and SI joint fusion as an adjunct to broader multi-level spine fusion constructs. Tenon positions its hardware not as a one-off gadget, but as an integrated surgical solution for a severely underserved multi-billion-dollar surgical market where historical surgical penetration has hovered below 10%. Future outlook, catalysts, and risks. Looking toward the multi-year horizon, Tenon Medical's trajectory hinges on navigating high-stakes operational catalysts while managing severe structural risks. On the upside, the company continues to secure crucial regulatory clearances, such as ongoing FDA 510(k) updates for advanced iterations of the Catamaran platform, and expand its intellectual property moat with dozens of granted and pending global patents covering joint fusion preparation assemblies and stabilization methods. As clinical data matures and surgeon adoption expands beyond its initial coastal strongholds into a broader national footprint, the potential to capture even a fraction of the estimated 279,000 annual U.S. surgical candidates represents substantial top-line leverage relative to its compressed microcap valuation. However, these prospective tailwinds are counterbalanced by severe, undeniable realities. The company faces persistent liquidity pressures, ongoing operating losses, significant cash burn, and the constant dilution risk inherent to early commercial-stage microcap medtech firms attempting to fund nationwide sales force expansions. Supply chain dependencies, hospital value analysis committee hurdles, and the dominant market share of entrenched legacy competitors like SI-BONE create formidable commercialization barriers. Ultimately, investing or analyzing a security like Tenon Medical requires looking entirely past short-term price noise, dilution mechanics, and sentiment-driven volatility to evaluate whether specialized biomechanical engineering can successfully crack one of orthopedics' final surgical frontiers.